71. Next news at 8. Chicago's Morning Answer with Dan and Amy continues next on AM 560. The Answer.
From the Matrix Home Solutions studios, this is Chicago's Morning Answer on AM 560. The Answer.
Listen to AM 560 The Answer online at 560theanswer.com, on the AM 560 mobile app, on your Alexa-powered smart speaker, and on TuneIn, iHeart, and on Odyssey. Only the biggest stories, only the biggest guests, and only the biggest opinions. This is AM 560 The Answer.
Top of the morning, Dan and Amy, and Bill Cassidy. He's a Republican from Louisiana, Republican U.S. Senator from Louisiana, one of those Republicans who voted to advance the $1.2 trillion Green New Deal, infrastructure legislation. He writes in the Journal that according to a Penn-Wharton budget model analysis, the bill would decrease government debt, and the gains from decrease government debt, $1.2 trillion, just decreases government debt.
Sure.
And the gains from new infrastructure would improve economic efficiency and productivity, which would translate into higher GDP and government revenue over time. It's amazing how every dollar the government spends has a positive multiplier. Every dollar provides a return on investment. So $65 billion in broadband, for example, to underserved communities, which is a evergreen and largely complete nonsense. That is going to improve GDP and throw off more tax revenue for the government over time. Right. For more on this and a range of other matters economic, pleased to be joined by Christopher Whalen. He's an investment banker and chairman of Whalen Global Advisors. He's also the author of Forward Men, From Inspiration to Enterprise, and he's the editor of for the Institutional Risk Analyst. Christopher Whalen, thanks for joining us again. Appreciate it.
Good morning, Dan. Good morning, Amy.
Infrastructure. We saw how important it is after the devastation left by Hurricane Ida. The levees held in New Orleans. Imagine if the rest of the country had New Orleans quality infrastructure, providing that positive return on investment, throwing off more government revenue, and improving American lives all around.
Yeah, imagine. I don't know that the infrastructure in southern Louisiana is that great, but there you are. It's nice that they didn't get flooded, but you notice the French built way up on top of the hill, and everyone else built down by the water. But that's what humans do. You know, humans want to live near water, and you can tell them that they're going to get flooded. It doesn't matter. Much like the budget discussion in Washington, reason does not come into it. So.
Mm-hmm. And the sort of sterile pro forma hand-wringing over raising the debt ceiling. Is this something even worth talking about as we're trying to rein in the redefinition of reconciliation for $3.5 trillion worth of spend and amnesty for 8 million people in this country illegally and so on and so forth?
Oh, yeah. No, there's all sorts of things in there. But the funny thing is, the Democrats have miscalculated badly several times now. Nancy Pelosi thought she could control this process, infrastructure, this and that, and it crashed and burned. So here's the question. Will Mitch McConnell and the Republicans hold the line on all of this craziness and force the Democrats into a default, which I think is possible? Everyone says this is thinking the unthinkable, right? But, you know, would the world go away and stop using dollars if we made them wait for a couple of days to get their interest payments, their tiny interest payments, by the way? No, because there's nowhere else to go. So we may cross that Rubicon this time, Dan.
Well, that would be interesting. That would be a moment because it would also be a real signal against the $3.5 trillion spend. But one wonders then if the Republicans moved that aggressively, would that jeopardize the blocks that Manchin and Sinema are providing on that $3.5 trillion of spend?
Well, they don't want to vote for the 3.5.
Right.
He's already made that very clear. And I think, you know, it's funny. I have a good friend, Danny Blanchflower, who I chat with on Twitter, and Danny was an advisor to the Bank of England. And he said, well, Chris, don't the Democrats have a majority in the Senate? And I said, no, they don't. There's at least 3 to 4 conservative Democrats who want nothing to do with Nancy Pelosi. In fact, these people may change party. I'm looking for Manchin, for example, to change party. And I think if you force the issue, you might be surprised at how badly Biden loses in a Senate vote on that $3.5 trillion.
We see stock, the Dow futures cratering this morning. I mean, the report is amid China property fears. Where do you have the markets right now, and with the notion that you've got people like the CIO of Morgan Stanley predicting a 20 to 40% correction, although he's been predicting that for a year?
Well, I think he's right. I'm just finishing up my quarterly on the U.S. banking industry, and it is terrifying what the Fed has done to banks, and by the way, pensions and insurance companies. They're all endangered species with this cast of characters on the Fed board. And having Powell is bad enough. Imagine if he were to nominate Lyle Brainerd to become chairman, or maybe chair. I'm not sure she'd want to be chairman. This would be a catastrophe for the country because, we live, Dan, in the age of the dilettante. We live in an age of celebrity. And all that matters is that people be popular. And this is why, you were saying earlier, the giveaways and everything else and these spending bills that are being proposed are basically about winning the next election. But the Democrats have badly miscalculated. If it hadn't been for Donald Trump, the Republicans would have won last time. So I think that this could be the death march for the Democratic Party. I really do. They could get slaughtered next year in the midterm elections. And then what do they do?
Well, you had mentioned that there is some discontent with Nancy Pelosi as Speaker of the House. Who do you think they'd want to replace her with?
Well, that's a very good question, Amy, because there's a vacuum underneath her. There hasn't been anyone strong enough to knock her out, even though clearly she needs to go. My question is, what nursing home is she going to go check into after she leaves the Speaker's office?
Home care.
Yeah. She's long, long beyond the point where she should have sat in the backbench, as you see in the UK. That's where older legislators go, right? But no, she hung on, and it kind of is a metaphor for American politics. We don't change, we don't evolve. We just keep building the same castles made of sand, and eventually the waves come in and wash them away. So I think Pelosi could really do terrible damage to the Democratic Party, which will break my heart, of course. But I think also there's a need for a mix politically to kind of realign the seating chart on the House and the Senate, because right now neither party is really very functional. But I am hopeful McConnell will hold the line, and if he does, good God, the Democrats will own a debt default. Wouldn't that be amazing?
I'm not so optimistic about McConnell, but it would be an interesting moment. I want to go back to, speaking of castles of sand and the Fed, and just get more specific. So the notion of Powell being replaced, you find frightening because why? Because that would indicate that the quantitative easing will go on in perpetuity.
That's part of it, yes. Powell has at least some credibility with investors. I think if you had the former bank regulator and, socialist economist from Maryland up there as chair, sitting next to Janet Yellen, that would be a really weak team for representing the interests of the United States. We continue to pick people based on appearances rather than competency. And if we do that, we're going to fail. If you look at people half a century ago that held these positions, they were real people. If you look at the people who helped America get out of the Great Depression and World War II, these were real, competent people, and mostly businessmen and bankers. We're not allowed to appoint people like that anymore. We have to have economists who have no money, have no independence as a result, right? And we're supposed to depend on them to make public policy. The most interesting comment from Powell, I think, over the last year was when he said it's not his job to go up to Capitol Hill and lecture members of Congress on fiscal policy. Yes, it is. But the man's a coward. He has no ability to push back. Just imagine if Paul Volcker were sitting there.
Yeah. Well, but I mean,
what he would say.
but I mean, Volcker is really the last Fed chairman of consequence. I mean, maybe Greenspan for a time, but he sort of faded in the final years too, didn't he?
Well, they at least respected Greenspan.
Mm-hmm.
The street walks on Powell now because they assume he's going to give them what they want. You noted the stock market is weak this morning because of the large property company Evergrande in China. The Chinese government has indicated that they're going to let them default. It may be the beginning of several bad things down the road because they're all funded with dollars. The Chinese economy is profoundly short dollars. That's how they make it all work. And I think that, for my part, this Fed board that we've had for the past several years has inflated this economy to grotesque proportions. Look at housing. If you default on your mortgage today, Dan, you know what happens? The bank will do a foreclosure. They'll sell the house, and they'll generate twice the proceeds they need to pay off the loan. What's wrong with this picture? So when Jay Powell gets up there under oath and says that his policies are not affecting home prices, who do you believe?
Mm-hmm.
I mean, it's right there in the data. This is a data-dependent Fed, right? Nope. So, the selective choice of truth-telling in Washington is getting more and more selective by the day.
Well, so that's interesting. So, I mean, along with a significant market pullback, if that happens over the next quarter or so,
I think it has to. You run out of buyers at a certain stage. You run out of greater fools, and that's why people on the street who work for large financial firms are calling for a correction. Because they know.
Well, what else will be attended to that?
Well, you probably won't see housing slow down too much because of the lack of new home construction, which is a subject we could spend hours on. And I think you'll also see other parts of the economy suffer a little bit, but I think you could have a deflation of the financial sector without hurting too many parts of the real economy, because there's a disconnect. Much of the Fed's policy moves the last 4 or 5 years have just benefited investors. It hasn't helped the average guy in the street. It hasn't helped small business, where we make jobs. That's where we create jobs in this country. So, to me, you could see a 20 or 30% correction in stock prices, and the folks out in Southampton will be unhappy. But other than that, I don't think it would hurt the real economy, because the real economy is why we're recovering. It's funny, the Congress and the big spend has clearly impacted consumers. You see them paying off their credit cards. You see all sorts of other indicators. There's no defaults on auto loans right now. Think of that. There's no defaults on credit cards. Why? Because they have all this cash. Somebody gave them money. But that will be a transitory benefit. It will go away. And so by this time next year, when we're looking at the banks, when we're looking at credit cards and other kinds of consumer indicators, I think they'll be heading back to normal.
He is Christopher Whalen, investment banker, chairman of Whalen Global Advisors, LLC, and also the author of Ford Men, From Inspiration to Enterprise. And he edits the Institutional Risk Analyst. Christopher Whalen, thanks as always. Appreciate it.
Have a great day, guys.
Thank you. And he joined us on our Turnkey.Pro answer line.
The stories you need to know to start your day. This is Chicago's Morning Answer on AM 560. The Answer.
Remember the kids' game Telephone? The teacher would whisper in the first kid's ear, "I have a purple giraffe named Lucy." And then each kid would whisper that to the next kid to see if the message could make it to the end.